a company who allowing its customer to pay after 90 days. Theoretically, you can also give them, you can give them as much time as you can, but normally, unless not paying is in your profit. For example, you allowed your customer to pay you $4 million. If he didn't pay in 1 month, you will be charging 12% interest. And if you keep your $4 million to the bank will give you 5% interest. So you wish that customer won't pay you back because he would be paying you 12% on $4 million. So you want that customer to not to pay, but it's in theory, not in reality. Okay, inventory, it means merchandise that company sells to customers. Simple. It is basically the stock that you didn't sell and it's not sold this year, or maybe it is made at the end of the year but you couldn't sell it in 2 or 3 days. You will be selling in next year. So all those stocks that are in your godown, finished good stocks, that is called inventory. Prepaid expenses, that are expenses you already paid in advance but you didn't basically consume that. For example, rent, you paid 3 months rent, right? And this is your first month. So first month rent you consume, that becomes your expense, but the rest of the 2 months expense, that is yet to be consumed. That is your right to stay in that building for the next 2 months, but you already paid, remember. So its name is prepaid expense, but it is not expense alone. It is your current asset. Your current asset is your asset. Right, guys? So don't just be confused by the word expenses here. So prepaid expenses are your assets, right? For example, in the case of insurance, supplies, like staplers, like screw, hammer, these kind of are your, glue, your office stationery. These are supplies, right, guys? You purchase in advance and you consume when you start consuming, that consumption become your expense. But if it's in your stock, or it's in your store, that is your asset. You own that. So pencils, marker, whiteboard, this kind of stuff in school, they are supplies, right? So when a teacher consumes that marker through into the dustbin, that become your expenses, right? Now the long-term assets, the second category of asset, the long-term asset means, of course, its life is more than 12 months or more than the company's fiscal year or accounting cycle or operating cycle, right? So which include property and equipment. So you bought a building, of course, you are not intended to use that building for less than 1 year, right? Because business is going concern. Remember that one. Its life is not determined. Accumulated depreciation. So that is the concept we will talk about. If you don't understand right now here, don't worry about that, because we will be having a whole chapter on when we talk about the treatment of fixed asset or long-term asset. Under there, we will be talking heavily regarding accumulated depreciation, which means, for example, if you bought a vehicle or truck for your company and the cost is $10,000 and you are going to use that for 5 years. So you divide it by 5, it means 2,000. So $2,000 you will be considered as that my value is depreciated. I bought it for 10,000. 1 year I use that one, so my truck value depreciated by 2,000, right? So you didn't sell it. So you, according to you in your books, now the value remain for next year 8,000, and next year you already used it for 2,000. So it means you use that truck for 2 years. 1 year consumption is 2,000. 2,000 means total 4,000. So this total 4,000 that you consumed or you used your fixed asset. So we call the accumulated. You accumulate year on year basis. For 2000 in year 1 plus 2000 in year 2. So total accumulated is 4000. Okay. So basically it's a wear and tear according, and you have different formulas for that. We also we will talk about that, whether we are using straight line, double declining method, this kind of method. Where we come up with this formula, we'll talk about. There are different method to calculate that one. Okay. So don't just worry about that. Long-term investments. So in current assets, we talk about the short-term investment, right? It means we intended to hold the stocks and bonds and government securities for less than 1 year. But if we intend to hold that stocks for more than 1 year, okay, we want to, we bought the shares of Nestle company and we intended that one, okay, after 1 or 2 years, its value going to go up, then we are going to sell that one. So it means your horizon of investment is long-term. So it is under fixed assets or long-term assets, and that is a category of assets. And also intangibles. What do we mean by intangibles? Intangible that you cannot see, you cannot touch, you cannot feel. How that become your asset? Patents, right? Patents. Sorry about my writing here. Why I cannot write here? Patents. Come on. Copyrights, trademarks, royalties, this kind of stuff, right? Which you cannot touch, right? You have this in paper form. You can say that it's only a contract. That, and also the goodwills, this kind of stuff. These are your long-term assets. So let's talk about the long-term assets one by one. Here we go here. So here is one. So property and equipment, tangible assets like land, building, computer, and equipment. Right? Property, we already know that this is land, building, right? Equipment means computers, fixtures like AC, right? Heaters, your water plant, purification plant, air purification machines, Xerox copy machines, this kind of stuff, right? Cumulative depreciation, amount of historical cost of the plant asset that has been allocated to expenses in income statement over the year, right? This is just a bookish, definition. I just told you, if you bought it for $1,000, $10,000, it means that is your historical cost, and you divided it with 5 with this life, you came up with this 2,000. It means that 2,000 is that you use that property or your that vehicle or something. So that would be your expense, right? You also said it will go to the income statement, and also it will go to the accumulated depreciation. We'll talk about this detail. If you don't understand right now here, don't worry about that. The long-term investments, which include stocks and bonds over the company that company did not intend to sell within the next year, which means its life is more than 1 year. So the intangible, which means with no physical form, such as patents, trademarks, goodwill. Right, guys? Any question? If no question, let's move on. So this is the balance sheet of, So this is the balance sheet of the Gap Corporation, right? So, but you heard, or you are saying a word here, partial. Consolidated, I already explained to you in previous slides. Partial means that this is not full statement. It means it is half statement, which is showing only assets. So the assets on the balance sheet, how it is shown. So you see the assets nature here. So first, current assets, and then the long-term asset. Under current asset, you see the liquidity wise. Cash is most liquid, it is number 1. Number 2, short-term. Number 3, inventory. Number 4, the other current assets like prepaid and other, right? So it is written in order wise as well. Long-term assets, so you see here, property, plant, equipment, and other long-term assets or intangible assets, right? So these are the total assets. Total assets, the addition of long-term and current assets, right, guys? Let's just talk about the other side of the balance sheet, which is liabilities. So we know that the balance sheet equation is assets is equal to liabilities plus owner's equity. We just completed asset side, and now the liability side. So as we just discussed the categories of assets, current assets or long-term assets, LTA or FA, fixed assets. Similarly, with the liabilities, current liability CL or long-term liabilities, which is LL or LTL or LL. Okay, we normally call this LL. So don't just worry. Here we cannot call this fixed liabilities. Okay, we call this long-term liabilities. So let's talk about the first category of the liabilities, which is current liabilities. Here we go. So liabilities, which means it is somebody else's money invested in our business in the form of anything, or we have to pay somebody else and we are not paying it and we will pay it after some time. This creates liability. Let's talk about it. So the debt payable in next year or within the year's business operation. Sorry guys, business operating cycle, if that is longer than 1 year. So normally the life of the current liability is less than or equal to 1 year. So what do we mean by accounts payable? So recall the definition of accounts receivable, which means we sold to our customer and customers are paying us after some time. So that is our right to receive from our customers. So we call this account receivable. Accounts payable is the opposite. We purchase raw material from our suppliers and we are not paying him cash right now, we will pay him later. So that creates account payable. Right guys? So definition is amounts owed to vendors or suppliers for purchasing of inventory. Right? Income tax payable means money that is to be